Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, your trusted source of in-depth analysis on all things Bitcoin and cryptocurrency. Today, we're going to dive into a shocking Fed warning that could crash Bitcoin and altcoin prices. As you know, Donald Trump's Liberation Day tariffs were announced recently, and the market reaction was quite surprising. Bitcoin and most altcoins outperformed stocks, with Bitcoin remaining between $80,000 and $90,000, while Ethereum was stuck slightly below $2,000. But what caught our attention is that the total market cap of all cryptocurrencies dropped from $2.7 trillion to $2.6 trillion. Meanwhile, the stock market had its worst week since 2020. The blue-chip Nasdaq 100, S&P 500, and Dow Jones slumped into a correction. So, what's driving this sudden shift in the market? We'll take a closer look at Federal Reserve Chairman Jerome Powell's warning that Trump's tariffs will likely lead to higher inflation and slower growth for the U.S. economy. Powell warned that his obligation is to keep longer-term inflation expectations well anchored and make sure a one-time increase in the price level doesn't become an ongoing inflation problem. He also mentioned high inflation and high unemployment can create stagflation, which is difficult to manage because actions to fix one issue can worsen another. Powell's statement mirrored that of other officials like Raphael Bostic and Adriana Kugler, who have supported higher rates for longer to combat inflation. Now, Trump disagrees with Powell, saying it would be a perfect time for the Fed to cut interest rates. But we need to consider the context here. The Fed is an independent government agency. Observers note that a more hawkish Fed at a time when analysts are predicting a recession would negatively impact Bitcoin, altcoins, and stock prices. Historically, these assets do well when the Fed cuts rates. At last check Saturday, Bitcoin was trading at roughly $83,435. But what's interesting is that top flash indicators hint that the Federal Reserve will cut interest rates sooner than expected. Crude oil prices have crashed in the past few days, with Brent plummeting to $64 on Friday. Additionally, copper, which is often seen as a barometer of the world economy, also nosedived. These assets point to a potential recession as demand from individuals and companies wane. The bond market is sending the same message, with the 10-year and 2-year yields plunging to 3.95% and 3.5%, respectively. Now, let's take a look at some charts that illustrate this trend. J.P. Morgan is saying there's a 60% probability of a recession, record uncertainty, and unprecedented government policy on tariffs. Given all these signals, it seems like we're heading towards a dovish Fed, which could start cutting interest rates soon. In fact, Goldman Sachs has raised the U.S. recession odds and predicted that the Fed will deliver at least 3 cuts later this year. History shows that risky assets like stocks, Bitcoin, and altcoins do well when the Fed cuts rates. For example, they all surged in 2020 when the Fed delivered an emergency rate cut at the onset of the pandemic. So, what's next for Bitcoin and the cryptocurrency market? As we mentioned earlier, a more dovish Fed could lead to higher prices for these assets. But it's essential to keep in mind that this is just speculation, and the market can be unpredictable. We'll continue to monitor the situation closely and bring you updates as we get them. That's all for today's Bitcoin Bulletin. Thanks for watching, and don't forget to like and subscribe for more insightful analysis on all things Bitcoin and cryptocurrency.